Now that we've been through the processes and the methods we use, I'm going to show you a few examples of high time frame and low time frame trades before we then move on to actually applying the methods to the different time frames. So this is kind of a first glance into the trading that you're going to be learning. And we're going to start off in this video with a high time frame continuation trade. So we said we have two different types of trades, continuations and reversals, and obviously the strategy works on all time frames, so we're going to show high time frame and low time frame. So looking at the market then, the first thing we need to do is build a picture of whether the market is bullish or bearish. Well, if we start on those higher time frames, the daily, the weekly, and so on, what we can see is the direction of the market overall. So we are looking at the weekly now. We obviously don't want to focus on really far back price action. If we look, all here is back in 2015. We only want to focus on the current price action to work out where the markets are going to go over the next few days, over the next few weeks. So we can see here on the weekly time frame that Euro USD formed this supply area, had a huge sell-off, traded downwards, and then eventually we hit a final bottom there and started moving back to the upside. When we moved to the upside, we left open some imbalances, as we spoke about before, and then we hit this large weekly supply zone just here, and after hitting that weekly supply, we started to sell off. This is where we first saw a shift in momentum. So thinking of the momentum and the structure that we spoke about, we have strong momentum going in, but then we see that momentum slowing down, final push, slow momentum, and then we had this slow momentum range here where we just kind of move back and forth. Bringing structure into it then, we see we had a higher high, higher low, higher high, higher low, but then we had a lower high. So this was the first indication that we may be changing the trend, but obviously we hadn't had a break of structure yet in the higher lows to actually indicate a break in trend. Now, when we hit this point, that is when that changed. And we had this clear break of structure, which pushed through, first of all, this point, but also this point as well. So what that did was open the doors to this area here, this imbalanced area, to bring us down potentially towards this kind of demand region here on the weekly time frame, where we had this pocket of reaccumulation before the market really took off. Now, if we look back at that using the same concepts, this is that area that broke the structure. We had this bearish trend in place, and the final end of that bearish trend was where we had reaccumulation and then a breakout. So we know, being the zone that broke structure and having a large imbalance into it, this is a very likely area to be filled. And we can see from the smaller price action here that we are in a downtrend because we are continually forming these lower lows, lower highs, lower lows, lower highs, lower low, lower high, lower low, and now potentially a lower high. So we have the overall directional bias for the trade. If we go to the 4-hour time frame, we can actually begin to mark out some of the structural breaks and see how the market is doing and how the market is getting on. And what we are instantly going to see is that we've had multiple large breaks of structure over here in the past. So if we mark that on, one break of structure there, and then what we've actually had recently is another break of structure here. So this would be a very nice setup for a position, and it gives us some good areas to work with. We can now start to plot on some supply areas just to make sure that the trend is intact and see if there are any imbalanced price zones that we may need to move into. Well, we can see here this very clear supply zone has been retested and the market has sold off. And what this has done is break that substructure as well. That lower time frame structure there that we spoke about earlier has now been broken through. So this is actually breaking this substructure uptrend and pushing us back into the larger downtrend. That was not confirmed until this low broke, but now it has. We can actually begin looking for short ideas. So we have the overall directional bias and we have the supply, the efficiency and so on marked out. And what we can begin to do now is look for an actual entry to our position. Well, at this price region, there's obviously a large imbalance here. We could see the price potentially come into here, but what I'm more interested in right now is actually focusing on this area, because this is an area that actually was the final point of support, or final point of resistance, should we say, before the market sold off and broke through the support floor and broke through this low here. So we could have a look at these two areas potentially for shorts. This one obviously is a large imbalanced area, so I do believe that we are likely to come and sweep through this. Best to mark on the imbalance as well. And from here, if we allow the market to play out a little bit, carry out a little bit of price action, where we see a very quick push up. So we get no confirmations in this area, which means we can now look towards this area for those possible shorts. And if we do get a nice confirmation in this area, or we could even approach with a risk entry, we can look to sell the market down. So what we are going to do real quick is just head over to the daily time frame and scroll price back to see if there is a suitable target area. Now, for a trade like this, we may be looking towards the top of this demand area. So the very final area where the wicks reaccumulated. We could look for that area, which also sits around 1.14500 500, which is a key level there. So we can look towards this key level there. Key levels are the 0, 250s, 500s, and 750 levels. The area, the levels that end with those numbers, and they are magnetizing points. So the market will often pull towards those and retest them very precisely. This will come into action in the application of trades, which you will see in the next couple of chapters. So we can look towards this for a target because it's the top of the accumulation area. It's kind of the final last imbalance point before we start getting a little bit more choppy down here. And it's also a key level. So taking it back to the 4-hour time frame, we could go ahead and either place on an order here. So we will do that for this example's sake. And we will also look towards the potential of a confirmation entry when we get there. And we could actually look to hold that down. So the two options we have here is obviously a risk entry, which is just going to trigger us straight in to the trade. Obviously adds more risk, but reduces the potential of missing the trade. And then we can also look at the confirmation entry as well. So if we go ahead and scroll price forward, we will see that the market did indeed trade towards that area. If we now start to look towards these lower time frames, namely the 1 hour and 30 minute, trying to keep it relevant to the time frames we're on the 4-hour time frame, so we don't want to go to the 5 minute or 1 minute for structure. We want to see some significant movements really if we are going for those confirmation entries. So we will look towards things like the hourly and the 30-minute time frame. So as we can see here, the market is breaking down a little bit there. We've had a little uptrend come in, break of structure here, higher high, higher low, higher high, and so on. I actually personally got a trade in here with the community. This is obviously going to be a while ago now if you're watching the videos, but we got a continuation trade up here. But obviously we're focusing now on the higher time frame basis. I'm sure we will cover this trade a little bit later in the course in one of the application videos. But as we see, the market has come up, higher high, higher low, higher high. Then we had a sweep of this low here. Now, this is something you may get caught up in. You could get caught up selling here. One of the things that I would really consider is that we did have imbalanced price into this kind of demand area here, which I'm sure if we refine it, we'll have a look on the 15-minute, for example, we'll see is a nice refined 15-minute zone. So when you're actually looking for the breaks of structure to actually shift the trend, you need to keep in mind imbalanced demand and supply zones. If there's a very clear imbalance like this, where we have a push up and then these generally equal lows, and then the market comes in and does this, this should not always be classified as a break of structure because we have indeed actually retested an imbalanced demand zone. So it's very likely when we get this that we're going to get another push up because it's actually just filling the imbalance. So that is something to keep in mind, something we will also talk about in the application videos. But after this, we've had a push up and we've retested those highs and then started to sell off. So now what we could do is look for a second break of structure because what that's going to tell us is that this demand is failing because it's already been retested once. If it's retested again, it shows that there is actually a lot of selling pressure pushing towards this zone. So we could look first of all for a break of that low. And if we get that, now obviously keeping in mind the risk entry is already on now, but if we're looking at confirmations as well, we will do that. So we want to see first of all a second break of the low for the true confirmations to come in. And if we can break under that low, we could then begin looking for a position. So here we can see we actually have formed a little supply and then sold off with a lot of pressure. What that does is give us a strong supply area, the zone that broke structure. And also, as you can see, it's definitely strong because we've had that slow momentum here and then the momentum sped up after this little distribution area that we had in the trend. So bringing the momentum back into it, we see that there's been a large pickup in momentum to the downside. We've now broken this structure point after breaking this structure point and also showing that we have a failed demand. None of these other demand zones are in balance. So keeping in mind the efficiency thing we spoke about, we've had a retest here. We've had a retest of this one here and so on. So we are actually just breaking down quite nicely now into a new trend. So this is actually a confirmation entry because we've had a breakdown in the trend from higher highs and higher lows to finally a lower low, where we've had one lower low, two lower lows, and we have a clear imbalanced supply area that we could put our order on, and that is a confirmation entry. Now that may seem confusing because obviously it is not a manual execution. We actually execute most confirmation trades with a pending order because the confirmation comes in the form of the structure shifting. So what we could do now is look towards this as an entry, place our order there, stop loss over the high. I'm just accounting for this little high as well. And then we could look to target for this example trade, just the low down here, see if we can come down and continue this new trend. Now you could also safely go for this area. This would be a demand zone, imbalanced demand zone. So we could look towards this for our target. It's going to be a more conservative move, still bringing us potential 8.1R if it wins. So we'll see how the risk entry does all the way down to that large extended target. And for the confirmation trade, we'll just look at this level and see how that plays out. And if we play the market forward, we see the market taps us into the trade very, very nicely. We get a push up into that supply zone. We do not breach the high of the supply, and then we sell off very nicely. And then after a little bit of consolidation and so on, the market does indeed push down. First of all, it takes out that demand zone, so that's a nice clear target. Then we push the low, and then from here, we are probably likely to continue all the way down to that larger target for the risk entry trade, so we will see. Now you can see it moving down very nicely. This is actually where we would begin managing positions as well, but we're going to get into that more so in the application videos, where we begin to trail stop losses. Now we'll talk about that. You'll learn a lot about that. In terms of basically what we do when we're in a trade is when the market makes a new lower low, we go ahead and move the stops. So in a trade like this, we would have actually moved the stops to this point after the market broke this low. We would have moved them again lower as the market keeps breaking, and we just follow price down. And that way we can hold a full move. And if the market reverses on us, we still get a full move at, for example, here, 8R, rather than taking partials and then taking more partials and so on. Because by the time you fulfill your full target, you're going to be holding around 10 to 20% of the position if you do that. And it's not the most effective thing if you want to build, long-term or large profits from your trades. But there we go. That is an example of both trade types, a risk entry and a confirmation entry on a high time frame perspective. So you can see even on the trades where we're using 4-hour structure, we are actually still executing on things like the 30 and 15 minute, because that is the structure that gives us the most refined entries. You can see here, if you were using the 4-hour time frame, for example, the chances of getting an entry here are pretty much non-existent. You wouldn't have seen that. But we can use that high time frame structure and then scale to the low time frame structure, look for breaks there, and then execute on those time frames as well. And that is the whole process of a high time frame confirmation trade taken in the markets right there. In the next video, we're going to look at a high time frame reversal trade, and then we will move on to a low time frame confirmation and reversal trade. And from there, we can move into the application. So like I say, this is kind of a first glance into the application of the processes now that you've been through them. And we will actually move on to applying them now, so you can see the step-by-step in action and all of the other things we haven't spoken about yet. And from there, you will then have a backtesting chapter where you can go and backtest these processes and really get in tune with how the market moves and how we use our system within those markets. So thank you for watching. Thank you for listening. I hope you've enjoyed this video, and I hope you're enjoying the course so far. And I will see you in the next video.